Hey guys, this is Julie. I'm going to go over how to, think probabilistically, right? And we can do that by examining the daily, weekly, and monthly opens and closes alongside with the Jats PT points and levels for those time frames. And that should give us a comprehensive view of market dynamics. This approach provides actionable insights into the key aspects of what the remaining range potential is by analyzing how much range is left in the period relative to the Jats PT forecast. And traders can estimate this probability of price movement within the remaining time frame. For example, if price is approaching a Jats PT 3 level, that is 95% of that distribution, the likelihood of further expansion diminishes, while proximity to a PT1 level may indicate room for more movement or an inflection back the other way. The range, we can forecast what the range has already traveled as well. So we can track how far the range has occurred during a specific time period. So, like if we're in day 4 of the week and the week has, for instance, a 200 point range, we can estimate, we can not estimate, but we can tell how far the range has gone on day 4 of that 5 day period to see what's left in that range for the PT3 range or even the PT2 range or the PT1 range, depending upon whether the one period is inside the distribution or outside the distribution. So that gives us really a big edge in determining whether we can go for more range. If it's, the one period is rising outside of the levels, we're going to be going for levels further outside or even a different time frame. So let's, you know, look at this methodology and integrating both historical context and future projections to create a framework for probability based trading with JATS-PT. And it's going to help you identify these high probability setups by aligning your entries and exits with expected ranges while dynamically managing your risk based on how much the range has been used versus how much is still available. So by leveraging JATS PT levels, both, time frame specific open and close data and the JATS PT levels, you can manage or navigate markets with much greater confidence and precision. So let's put this into perspective. How do you accomplish all of this? It's not difficult. You don't have to be a math major. So if you go into your data series, you can add different time frames to your chart. So I've got a 30-minute range on top, a daily range next, a weekly range, and a monthly range. So you can see that the bars have different days to load for the data. I load 150 days for the 30-minute range, 3,000 days for the daily, 5,000 days for the weekly, and 5,475 days for the monthly. Okay. And I have highlighted the open and close for the weekly and monthly over the last couple of sessions just to give me an indication of where my open and close levels are. But if it were just trading open and closes, we would all be wealthy real quick and we wouldn't need to go into any further, calculations or probability analysis. It just doesn't work like that. We need to know what the probability that the range, like I said, has been trading in already versus what is available to trade out in the future. So let's put some distributions on the chart. Here is a daily ES, and what we want to do is add the PT2 twice. So we're going to add it one time. That puts the PT2 indicator on the chart, which measures 1, 2, 3 in a point range for whatever bar size is on the chart. You don't even have to change anything. It'll pick up whatever's on your chart. This one is a daily. So I'm going to add another instance, but I'm going to change it to just show the PT3 line is yellow and a one period daily. And I'm going to overlay that yellow PT3 daily one period on top of this prior daily distribution. So we want to put it on top of panel 2, just like that. So we can tell when the one period is inside the distribution, your bars are little tiny and they overlap. You're not going to go far. But when you break out, you got big range opportunity. And then when the range is finished expanding, as happens often with the volatility sellers, they're trading it back to the distribution. Okay? So it's a game of whether we're inside the distribution or outside. And we want to do this on the daily 1, 2, 3, as well as the weekly and monthly. So you can see here we had that big daily range expansion opportunity. And it probably coincided with the weekly or monthly being outside as well. That was probably an OPEX period. So we can put a daily 3, a daily 1, 2, 3 on the chart. Open and close. Because when you measure the bar from the open or the prior close, you can often have a gap. So if I spread this out so you can see it, you can see that when we're inside the distribution, it doesn't go anywhere. It stays inside the orange, the 3. But when you're outside the 3, you can see here it broke the 3 and it went to the tail. It went to 1.5 times the range. But the market will stay within these point ranges, either within the 3, 95% of the range, or the 1, 34% of the range, or the 2, 68% of the range. So I've color coded this 1, 2, 3, 34, 68, 95. And you can tell what the real volatility is doing or going to do within that point range by where the 1 period is relative to that 14 period. Okay, so here on the weekly, we can do the same thing. We can change this to a weekly bar, or just leave it on a daily and use a daily with a weekly range. There's going to be 2 different levels. So you might want to start with a weekly bar and do the same thing. Put 2 instances of the Jats PT on. And then apply and change this bottom one to that 1 period weekly. And put it in panel 2 with the weekly distribution. And it doesn't really matter if I display it in the data box, but alright, so you can see when we're inside the weekly range, the bars are small. When you're outside the weekly range, you get that range expansion. And so when you match weekly outside range expansion with your daily, that's when you can start planning for some intraday movement and go with the range expansion. Same thing for the monthly. We change this to a monthly range. We can get an idea of whether we are inside the month or outside. And ideally, I mean, we're at the beginning of the month, okay? I mean, sort of in the middle, sort of like early middle, but there's about 3 weeks left of trading. 9 days left. Or 14 days, I'm sorry, 14 days. All right, let's just put the monthly one on here real quick and we'll see where we are. Monthly one, apply. And I want to change this top one to a 1 period monthly. Sort of did this one backwards, but change this to monthly. You can also, measure a daily or a weekly inside of a monthly range. You're not restricted. You can measure anything. All right, so this is going to put the monthly on top of the monthly distribution. You can see that because we've started the month out, we're below the monthly 2 by about 30 points. 178.25 to 208.25. So if we get 30 points above or below the current month of February, we're going to run into that monthly 2, which is 68% of that monthly range. So that's going to be a key level to watch. So the monthly high is 61.81.25. Or wait, I'm sorry. Duh. These are monthly bars. Okay, the high is 61.23.25. 30 points added to that is 61.53.25. So if we go higher, 61.53 is going to be a very significant level to watch for an inflection. The low is 59.35.50. If we subtract 30 points from that, it would be 59.05.50. Okay. If we hit that, it could be a inflection back up. But if we break down, then it's going to run from 208 points up to 291 points. So the difference between 291 and 208.25 is 82.75 points. So you're going to go 82.75 above or below these levels as an opportunity. Here, hang on. Let me just do it this way. 59.05.50. 82.75 would be 58.22.75. Potentially would get us back to this low. And for an upward move, 61.53.25. 82.75 to the upside would be 62.36, potentially for an upside move. So there's your opportunity to go from the 2 to the 3 point range wise. Okay, so there's your time and price opportunity by using the point range of the monthly contract, which measures the number of days in the month. We could also do the same for a 30-day distribution, which is going to be higher. It'll be a higher time period, so it'll give us a little bit more range expansion. And we could also put the monthly distribution on the daily chart and see where those levels line up with the 1, 2, 3 monthly distribution. See if we got anything that would match. So we can change this from a daily to a month, and this to a month. And I won't need the fibs because it's a monthly distribution and we're not outside the month yet. So there we go. So I think this 59.05 and 58.22. So that would be just above this monthly one, and the 58.22 would just be above the monthly 3 on the point range from the high. So that takes us down to this 58.22 to 57.72 level, or 59.05 would be just above this bottom monthly one, which is monthly one in the close. Oh, it's a monthly one in the open, so very good. So that 58.75 is a strong level. The reason I say that is because even though we're measuring from high to low to get these point range approximations, the dealer algos basically trade the open and close like we do. But it's nice to get an idea, a trajectory of where it could be going. And we are inside the monthly one, so they're still delta neutral, right? So they could hit their point range and still be delta neutral. They don't care. As long as they're around 58.75 to 61.75, they're happy as a bug in a rug. Even this, probably this too. They're probably spreading it out to this 61.93, 6200 to the 58.50. They're just, delta neutral. They don't care. Price can go anywhere in there. So right now it's looking kind of weak, but anything can happen. And we just want to trade that monthly range. Know where we are inside the monthly range on any given time period. Are we inside the daily or outside? Are we inside the weekly or outside? You always start inside, right? When we get a weekly distribution, you're starting inside the week, but it'll start moving in within that point range quickly, and knowing what those point ranges are going to give you an edge. My favorite day trading template is a 60-minute 5 hour 1 hour IB, and let me go ahead and put this back on a 15-minute time frame so I can show you this. I have a template, and I'm going to add the 1 hour IB to this, but here's your 60-minute 5 hour, and you can see that it trades 1.5 times the 60-minute range or the 1.5 times to the 5 hour range frequently as good levels for intraday trading. And I think I already have the 1 hour IB on here. So that's that first hour of trading from the open and close of the RTH session. So when you're inside the range, you're not looking for range expansion and you stay inside your levels. When you go outside that, that's when you plan for your range expansion. When it goes back inside the distribution, it's going to be rotating back up RTM, especially after a range expansion. So just having Jats PT to measure where you are daily, weekly, monthly, or the intraday time frame can help you step up your game. I hope it can, and we'll be glad to work with you next week in training on Wednesday. See you then. Talk to you later.